Everyone, how's it going? It's Wednesday morning at 8 o'clock a.m. Pacific time. So just go over real quick. Let's come over here. Here's Apple real-time chart. So just the Greece austerity package went through this morning. So Apple's up at 338. Of course, this is a liquid market, but pre-market, but still that's an actual price that went through. Everything looks good. Oh, wait a minute. What happens here? We open up and it comes down to 332. The market's trending this way. Well, let's see what happened. What can cause that? The Apple falls out of bed by $5. The market goes up. Oh, hello. What do we have here? Hello. So, anyone starting to buy this stuff now, or is it just in my imagination? So, anyways, Apple should be well above 340, and so this is where I'm getting at. Like, I don't care. Say Apple was at 300 and it comes up, or not even using these. Like, say there's a pinning effect or something, and Apple's up. Apple goes to 350 this week, and on that Friday pins at that 350. Big deal. It's nothing to have to do with that. So that's where pinning and the max pain thing all are completely different. It's staying under this range for a reason, and there's going to be a lot of selling pressure there. So hopefully one of these days, though, I mean, it's one of those hope things now, but that's why I only sell covered calls. I'm not really trying to sell, especially since Apple's been beaten down for so long in valuation. The floor in Apple, it's just like cash floor is coming up and up and up and up. So that's why I just anymore don't even sell credit call spreads, bear call spreads. I only do covered call stuff because one of these days it is going to blow through this number, and I'd rather gain from that or have my my gains capped than actually take a loss. Apple just is so undervalued. So I added two here. This little portfolio thing is mainly what I wanted to go over and kind of do some explanation. Here's 4 accounts. I mean, I have a lot more models, but I don't even know if I can keep up with this at the time. So this Apple credit call spread, or credit spread, I'll just be using a lot of different stuff. Mainly just how it's going to go with whatever the market's doing. Right now, for the foreseeable future, it's just going to be put spreads. I can do iron condor and stuff like that, but it's going to be hard because if I want to like shoot out an email to people or keep this up to date, I need to keep it like simpler and cleaner. So I might just keep it put spreads. If you want to do other things, kind of, at least this is a guidance. Like I said this morning over here, I would have rolled that 285 up. What I'm going to try and do is use this exactly how a person would. So you only have $5,000. So it's not like I can write another spread. I don't have more money to do it. I've used up my $5,000. So I would want to take this 285 and move it up to like the 305. And then you may ask, well, why are you not using that's on monthly stuff. I'm only going to do monthly stuff. So why are you not using this 320 stuff? Well, because I need to keep this ultra safe because it's built to not lose money. Plus, when things are uncertain, like this Greek thing going on, I'm not trying to come play here. Like, taking in, this is, 10% or so gain in 1 month. That's fine. You don't got to try and push the envelope and squeeze everything. So right now, I could really just set this and be happy with a 10% gain for the month. You do that, that's over 100% gain for the year. So there's no reason to keep, get too greedy. But what I would have done is probably rolled this 285, 280 to a 305, 300. You can't do that because you can't have a short and a long on the same line. So you would have to come up. That's why it's good to have a few accounts. What I would normally, if you have more money, then I would just go ahead and create another in a separate account, a 305 or something like that. Or you can do whatever you want. I'm just trying to keep this model profitable. And then coming down here, I have these covered call stuff. Obviously, if you have a different core position, that's great. Actually, I won't go over this. You can kind of read what's in here. I just threw this together, so I'll kind of fine tune it. I got some comments on. I'll add some things. These profit and losses, I'll update. Here, some people are asking why is there only one contract. I'm keeping it real again. Is I said yesterday I sold a half a position on my covered calls on the 360. So here I'm keeping true and only sold half a position. So I'm just waiting for more of a pop. Maybe, well, I probably should have just went and did it all because of the 4th of July weekend, but nonetheless. So that's that. And if you have other ways of doing things too, that's more time sensitive because it is hard for me to just one person. Okay, what trade am I going to do this? And then like a lot of time goes by, and in this business, time is definitely money. You can leave some money on the table real quick. So if you think anything different, go for it. I'll keep these up to date as I can. They might not be, I guess what I'm getting at is max profit. Like, well, man, you should have done that. Well, yeah, I should have if I would have had more time or something like that. So I'll try and keep these clean and solid trades. That's probably about it. Really, I just kind of want to explain like why do you have all this max pain stuff and then these. Again, there's no harm in knowing this data and then trading a lot safer. There's no harm in it. So this is what I'm saying. This is max risk, max profit. And as you're kind of seeing, it's not really too much risk, really. But since you are dealing with credit spreads, the money goes away and it never comes back. It's not like you can buy, wait, and hold. So anyways, that's why I would. And normally, too, coming back to this, I probably would be a little bit more aggressive and maybe just because I do have this gain already, I'm not rolling up as quickly as I could. Also, just in a lot of things too is just this whole debt thing we're going through right now. Like if it's a quieter market, I would be way up higher. But since there's just a lot of unknown, you kind of, I don't know, it's more or less look at the profit. If this profit wasn't as much, I wouldn't be, or I'd be more active. So maybe I'm being a little lazy on that, but at least here it is. So yeah, I think that's really about it, but you're starting to see how it all works, and it's only gonna get worse because now you have like you're starting to get some pretty good volume. Like it's always been down at 10,000. You're starting to get up at 20,000 contracts on a weekly. Yeah, good luck getting over that, baby. And then what's going to happen? So Apple's at this 335, and here's what's going to happen. This is going to keep closing down. So this will come 345, 340, and Apple then won't be able to get above that. And that's how the game goes. So that's why I wrote in that latest Seeking Alpha article, this is looking like pretty much your floor right in here somewhere. And then because Apple keeps running up against the weekly right here, 340 can't go above. This will come down. And then it may stay like that for a few weeks. This may start to come up, and then you'll get a point of just fusion, and something's got to give one way or another. And once it does that, it'll just keep going and going. I think since these and all this weekly data stuff is from the past when they weren't as popular, like in the very beginning, there was not much being sold. So the more popular these become, I would imagine the more strength they're going to have. So maybe that Seeking Alpha thing doesn't play out. The article doesn't play out where it's just too strong. It's not moving. These have to move in order for Apple to move. So we'll see on that one. And we're kind of getting into uncharted territory as far as volumes and stuff like that. So